Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. To open today's webinar, this morning the release of the FOMC minutes indicated that the Federal Reserve officials see a rate hike fairly soon. Now this could put the March meeting highly on the table now of a hike, so we need to keep very close watch on the news alerts in the coming days into the start of next month. The view for at the moment for gold still holds to a potential supply zone around that 12.41.46 area, and I expect to see further resistance to hold if challenged and look towards the immediate support of 12.33 and lower down towards the objective that I'm holding of 12.18 to 26. In light of the pattern, a break above 46, however, would negate the downside in the short term and instead put an objective of 12.60 to 62 and reassess from there. While the Australian dollar once again rallies on towards that 77 handle and fails to sustain. Still seeing a cap around 77.30. I expect to see further weakness into today and look towards that support of 76.70. A break beneath there would give further scope down towards 75.95.05 and reassess from there. In the unlikely event we do get a break of 77.30, then this would actually give further scope to a target of 77.70. But as you note, the technicals are not supporting this move, so I would expect to see the upside attempt fail. And also note, as you can see here, I've drawn with a stochastic a line that comes across as the indicator is dropping down. And if you look at the price, it's trying to go up. So we have bearish divergence. So considering that we have that as well, does give further emphasis that we should see a further break to the downside. With the dollar index rejecting that level for the second time of 101.70, the market for the euro actually responds quite bullish and now looks towards a resistance of 105.75.80. It still has a lot of work to do on the top side to get any kind of confirmation that we are breaking back into a bull phase. And the next level above 105.75.80 is seen at 106.55.60. Now a break there, then it would give some consideration that we could be seeing a further US dollar weakness and a bullish euro emerging through the cracks. But however, I expect to see further weakness returning to the euro and reject this region around 105.80 and look back towards the support of 104.55.70 with the near 14-year low holding at 103.40 to 103.65. Well, the dollar yen story, well, did retreat from that 113.80 level. However, still seeing the support zone at 112.50 and also from the recovery back above that 113 handle this morning does give further light that we could see a recovery up towards 113.45 as minor and then higher up towards 113.80. And it is from there that a break will give further scope up towards 115.5. In the unlikely event we do see a break beneath 112.50, then this would give further coverage to the downside and expose an objective that holds at 110.60.80 and reassess from there. Well, the pound still going nowhere. It's still lacking momentum, however. Confines the range to 123.80 to 125.10.55. In light of the pattern, I still expect to see further weakness to the pound and take out this level of 123.80 and look lower towards the support of 121.40 to 121.80 and reassess from there. And to wrap up with oil, well, there was no coverage to the upside since that rejection of a 40.55 handle, and I expect to see further weakness once these indicators start strengthening up to support a bearish case. The objective holds towards 49.60.90 level and reassess from there. So that's a wrap for this morning. Thank you very much for joining me, and as always, look out for the intraday report that will be released shortly.